Welcome to this YouTube channel of K-Leaders. I'm Francis Chan. In this episode, I'm pleased to share with you the requirement to prepare audited financial statements. Some clients come to me and said, Francis, I never commenced business since incorporation. I have not paid even a single dollar in my company. So what you expect me to produce for audit purposes? I will reply to them that your balance sheet will not be zero because you at least have your share capital and expenses to pay for running the company, such as you need to pay for company secretary fee. So you need to prepare management accounts and provide it to the auditors for audit purposes. So even though your company only have $1 in the balance sheet, you are still obliged to prepare audit financial statements. If your answer to my question, have you prepared audit financial statements, is never or sometimes, then I will suggest you to spare a few minutes to receive my sharing about the law requirements. All Hong Kong companies are required to prepare audit financial statements. The only exception is those dormant companies. So as the case that I mentioned, the company has never commenced business or has been inactive for some time, they are not dormant company under the company ordinance. If you want to enjoy the benefit of not preparing audit financial statements and not to appoint auditors, you need to declare your company dormant under Section 5 of the company ordinance. Companies' auditors must prepare audit financial statements for every financial year of the company. These audit financial statements must be audited by certified public accountants registered with the Hong Kong ICPA, which is the recognized accountancy body in Hong Kong. The company ordinance has a number of provisions governing the preparation and presentation of audited financial statements. If you do not comply with the relevant legislation, you will be subject to the punishment set out in the relevant provisions of the ordinance. Directors can determine the financial year-end date of a company. Under the Company Ordinance, Chapter 622, financial year-end day is termed as accounting reference day. Financial year is termed as accounting reference period. Directors can determine to alter the financial year-end date by passing resolutions. For public companies or companies limited by guarantee, the alteration needs to report to the company registry in specified form. For newly incorporated company, its first set of financial statements should cover the period from the date of incorporation to the financial year-end date. The duration of the period should not be more than 18 months after incorporation. For the subsequent financial year should cover a period of 12 months. In this slide, I set out two scenarios to better illustrate how the 18 months and 12 months rules apply. So please take your time to read it. Audited financial statement basically include director's report, auditor's report, statement of comprehensive income, and statement of financial position. The audit financial statements must be approved by the board of directors before directors sign on it. Audit financial statements must be presented to members at annual general meeting and produced to the Inland Revenue Department in support of the relevant set of profit tax return. For normal private limited company, there is no requirement for them to submit their audit financial statements to the company registry. So, the general public cannot retrieve the financial position of a private company by conducting a company search. The ordinance specifies the period whereby the company has to present its audited financial statements to its members. For newly incorporated company and its first accounting period is more than 12 months, then the make-up day of the financial year end should be the later of the following date, 5 months after the anniversary date of incorporation or 3 months after the financial year end date. For better illustration, I also give you two examples, and please take your time to understand the calculation. Holding companies are required to produce consolidated financial statements unless this holding company is a partially owned subsidiary. Then, if no members object to it, or all members agree to it in writing, then they can opt not to prepare consolidated financial statements. But the company is still required to prepare the company-level audited financial statements. If the holding company is a wholly owned subsidiary of a body corporate, then the company can opt to prepare its own company-level audited financial statements or the consolidated financial statements. The preparation of audited financial statements in Hong Kong is mandatory, and there are provisions governing how to determine the financial period and also the duration of presenting it to the members. So for inactive company, the Inland Revenue Department may not require the company to submit audited financial statements, or even not require the company to submit profit tax return. But this does not mean that the company does not require to prepare all the financial statements according to the company ordinance. So I hope that you have better understanding of the requirement to prepare all the accounts in Hong Kong. In the next episode, I will share with you answer to my last question of my compliance test, which is about share certificate. Thank you for watching and see you next time. Thank you. Bye-bye. Thank you for watching this video. If you like it, please give us a like and subscribe and share with your friends. Look forward to your continued support. See you next time. Bye-bye.